right. Now, here we go. Revenue from clients. We didn't do anything with that, so we bring it over. Any account that you didn't touch with an adjustment, you bring that value over. Rent expense, we didn't touch that, so we bring that over for $9. And remember, this is happening in the same month. Okay? Then for the wage expense, here we go. We have a wage expense. We went ahead and we debited. So what are we doing here? We're doing what? Adding. We're increasing the amount. So we add it in, and we end up with how much in the wage expense? Wait a minute. $15. Now, the expenses. What do you think we have to do with these? We have to bring them over. So we now have to bring the expenses over into the correct column. Remember, these are the normal balances. So we bring that over. Now, in order to make sure that the adjustments that we've added in are correct, we must now balance. We now need to make sure that we are balancing, because again, this is the adjusted trial balance. So we're going to find out how much, what is our balance at this present time. And our balance should be, once we add both sides up, is $84. Correct, Daryl. Now from the adjusted trial balance, we are now bringing in, and I know what you're asking. Well, wait a minute. So if we've done adjusted a trial balance, okay, why do we need to do another balance again? We need to now begin to do our financial statements, okay? So we're going to start with the income statement. We're going to find out whether we made money or not. So we're bringing this in. So in the income statement, what does the income statement have on it? The
income statement, it has
somebody was going to say expenses. Who was going to say expenses? Come on. Yes. It has expenses, but what else?
Revenue.
And revenue is, and we do have revenue. What else do we have that's in it? Anything else? Come on. What page did I tell you guys you could find that on? It's found on page 46, remember. So all we're going to have is revenue, and the expenses. Because remember, whatever we made, revenue from clients, whatever we made, we're bringing over into the right areas, and then we're bringing over all of the expenses to determine whether or not we have made any money. Even though we've added to the wage expense, because even though we're going to go ahead and pay it in the future, that's still considered an expense for this month. Okay? So here we go. We're going to bring all of the expenses over, whatever totals that we have. So we're taking them from the trial balance, $6. And now we're going to do what? We're going to take the expenses and subtract it from what? Our revenue. Let's see if we made any money. All of our expenses are how much? What do they total up to? $38, correct. Now, here on the income statement, we're not balancing. On the income statement, we're taking what we made, subtracting our expenses, and we made how much money? We made $8. Woohoo! Net income.
All right.
Now we can show that we are making some money. And again, we balance out because if we go ahead and if you add those $8 that we just subtracted back in, we show that we are still okay. That our math is correct.
Now, one thing I warn you about for the income statement is that it'll always balance at the end, even if you did it incorrectly. So let's say if you added wages payable in the debit side of income statement and you did the subtraction, it would have still balanced, but you would have had a different net income. Like it would have been like $2 instead of the $8 that we have originally.
Correct.
So always be very careful to only have your expenses and your revenue in the income statement on the worksheet.
Correct. Now from the income statement, okay, we've done the income statement. From the adjusted trial balance, now we're going to take the information for our balance sheet. And according to page 46 in our book, the balance sheet has what? Assets on one side, and liabilities and owner's equity. If you're ever wondering, what do we have? Here we go. Assets. And then on the other side, liabilities plus owner's equity. That's what we have on the balance sheet. So, what are our assets for this company? Cash, accounts receivable, prepaid insurance, store supplies, store equipment. Is that it? Is that it? Yes? Assets. No, because what did Jose say? Accumulated depreciation is a contra asset.
But it still goes on the balance.
But it still goes on the balance sheet, okay?
Because remember, the accumulated depreciation always follows the asset account. It'll always be glued together with that. It's like your left eye and your right eye. It's always got to be there with it. It's always
the only thing though is that it's not going to go on to, it goes on the balance sheet, but it's not going to go on the debit side. It'll go where? On the credit side, because it's contra. It's taken away from the value of the asset. Okay?
And the one thing to note about that is that on the worksheet it shows it like that on here because it's only debits and credits on the balance sheet. That's why the accumulated depreciation goes on the credit side. Now when you go to the formal financial statement for the balance sheet, you're going to have the store equipment and the accumulated depreciation for that account on the same
Side.
on the same side, on the asset side. It'll only look a little different because it'll start giving you two columns, and one will be subtotal, the other one will be final totals of all your numbers in there. But we'll get to that later in time.
Yeah. So right now for the balance sheet, let's go ahead and bring the amounts here for each one that we stated. Bring them over.
Dang it.
There you go. Now, what do we also have on the balance sheet? Now we go ahead and we have the liabilities. Well, let's go ahead and total them out, right?
Mm-hmm.
Hold on.
So how many liabilities do we have?
Wait, we still have to bring in the
We still need liabilities and owner's equity.
well, we still have to go ahead and bring the withdrawals in.
I know,
Yeah,
but that's part of owner's equity.
correct. So now we're going to go ahead and bring in what? The liabilities, right? According to the formula here. So we're now bringing in what? Accounts payable.
Is that our only liability?
No.
What else?
Dun 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 dun
The wages payable,
dun 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 dun.
Over here,
dun,
the bottom.
Yes.
correct? And then of course,
$8. So that's our liability. And then what's next?
then we have what? Owner's equity,
Capital.
which is the capital account,
Mm-hmm.
and
Is that our only owner's equity account that we need to bring into the balance sheet?
what else?
For what? For
For the balance sheet.
Owner's equity,
For the
what
owner's-
else?
Capital,
the
withdrawal.
withdrawal.
The withdrawals,
Correct.
correct.
And now, the one thing that's kind of confusing here is that withdrawals does show up here on the worksheet, in the balance sheet, only because it's the way, it's just how they did it to make it balanced for some reason in the worksheet. That's, you have to bring in withdrawals so that you balance out correctly for the balance sheet on the worksheet. You won't ever put in the withdrawals on your formal balance sheet because you've already calculated in your statement of owner's equity.
Correct.
Okay? But it's just funny, it just looks funny here because that's, we don't do the statement of owner's equity on the worksheet.
So now, we've ended up here. We now have to, again, with this balance sheet, make sure that everything is balanced. So we, and balancing, what we're doing here is we're just trying to make sure that we're checking our work, that everything is logical, that we've got everything the way we're supposed to. So when we're at the end then, we're going to go ahead and show, bless you, a total of what?
Bless you.
Bless you. Now remember, we won't total here until we do something, so let's go ahead and show. So all of this totals out to how much?
How much is it?
46?
46, yes. How much is on the other side?
38?
38.
Oh no.
Wow.
Oh,
Okay,
no,
notice,
no.
again,
38.
38 because of, it comes up again. Now, in order to balance, right, we're going to take the net income of the $8 and we're going to add it on this other side, and guess what we end up with? Again, the 46. Questions?